Hi, I'm RJ Baxter with Intercap Lending. I want to do a quick video today about interest rates. I think interest rates are likely to go down throughout the remainder of this year. I mean, you see headlines all over the place that interest rates are going to go up. We're going to see 8% mortgage rates, 9% mortgage rates, 10% mortgage rates. And I think actually the opposite for some very specific reasons. I'm going to share that with you in a second, but before you get too excited about lower interest rates, yes, that is going to help your payment if you're buying a house, and it can help you qualify for more house. So this is good news. The bad news is there's a lot of people waiting for rates to go down before they buy a house. So that means that a lot more people are going to jump into the market when rates go down, and it's going to make it even more competitive. Already in Colorado, even with rates still in the sixes, we're seeing multiple offer situations where home prices are getting bid up. So people are paying over the asking price that the seller is paying for the house. So when the number of buyers increases with lower rates, it's going to become even more competitive. So my opinion is now is the time to get in on buying a house, even though rates are up a bit. Just refinance it later when rates go down. We have a program called Free Fi where we'll do that for you for no lender fees within the next 2 years. So we'll take care of you on that. So let's go into the reasons why I think interest rates are likely to go down. The first one is inflation. Inflation has been high, definitely, and it's still elevated, but inflation is down from the highest levels that we saw last year. And I think inflation is likely to keep going down throughout the rest of this year. Why? The reason why is that inflation is a 12-month look back. What they do is they take the month-over-month inflation readings in a lot of categories over the last 12 months. They add those all up, and that's the inflation number for that particular month, for the year-over-year number. That number has been coming down gradually because we've been replacing higher numbers that we saw a year ago with the lower month-over-month numbers that we're seeing now. And the numbers just a year ago in April, that was when the Fed first started hiking rates and inflation was still elevated. So as those higher numbers from a year ago get replaced, inflation is likely to keep going down, and lower inflation leads to lower interest rates and vice versa. That's why we've seen such high rates with high inflation over the last year. The second reason is recession. It's almost certain that a recession is coming. I think it could likely happen even this year. And in a recessionary environment, historically, rates come down. That's a lot of times what triggers the Fed to start cutting rates to stimulate the economy, to bring the economy back. And in a recessionary environment, we see lower rates. So I think that's likely to happen again. So those are the two main reasons why I think rates are likely to come down throughout the rest of this year and into next year. So give me a call if you'd like to look at your situation. I'd be happy to run some numbers for you, see what you qualify for, and look at specific interest rates for you. Once again, my name is RJ Baxter, Intercap Lending. Have a great rest of your day.